Hey, this is Mack with PriceActionTradingSystem.com, and I'm coming back after I've already finished the video today. There was one other thing I wanted to speak about and I forgot to add to the video. And I think it's important that I do because I'm getting so many questions on it. I want to squash those questions. So I'm going to throw this back on to the beginning of the video. So the actual chart lesson will start in a moment, but I'm going to try to make this as quick as I can because I've already got a long chart lesson today. But a couple of days ago, one day this week, I talked about uh, why I like to trade the ES and why I didn't like Forex and why I didn't trade oil and this and that. And a few people came away with the idea that oil and some of the currencies were not good markets to trade. And I didn't mean it to come across that way if it did. I don't believe Forex is a good market to trade for the reasons I talked about, which were simply that you're trading against the brokers in a lot of cases, and it's not very well regulated, and there's a lot of slippage, and you don't get good fills, you don't get guaranteed fills. That's one thing about the ES is that wherever you have an order, you're going to get a guaranteed fill, and there's not going to be any slippage, and there's only one tick difference. But anyway, the real point I want to make is if you want to trade oil is fine to trade. If you want to trade some of the currencies, the pound, Great Britain pound, the yen, what are some of the other ones? The euro. Those all have they all have plenty of volume. They all trade well. They all move well. I just prefer to trade the ES because it's so predictable, because there's no slippage. You might get a tick or two of slippage. One of the descriptions I gave was how I had a perfectly good trade set up that turned out to be a loser because of slippage. And that'll happen to you in those markets sometimes because they move really fast, and sometimes in certain areas there's thin volume. So just be aware of that. There's nothing wrong with those markets. They're just less predictable. They move a whole lot faster. And, that's great if you're on the right side of those trades, but if you're making a mistake and you're on the wrong side, that fast movement can eat you alive, and you might get slippage on top of that in a real fast move. So for that reason, I prefer the ES. I don't like Forex at all, and again, the reason is because it's not regulated well. You're not trading against other traders in all cases. You're trading against your broker in some cases. They know where all the orders are. They know where all the stops are. Um, in the CME, there's only one book, and all the prices are the exact same for everybody. And that's not the case in Forex. So just keep that in mind. And again, there's nothing wrong with trading oil. I don't have anything against oil. I just personally don't like to trade it myself. I don't see any need to trade it when you have the ES that has so many benefits. And I talked about all that in the previous video. I don't remember which one it was, but it was one of the ones earlier this week. So if you want to go back and listen to that video, it's one of the videos this week. So, but anyway, just wanted to throw that in there so people would stop, because I'm getting a lot of questions about it, and I didn't want to confuse people. And no need to wonder if there's any problem with trading oil. Those are all and most all the currencies, as long as you're in the futures trading them, they're fine because these markets are regulated. There can be slippage. There's just so many benefits to trading the ES. That's why most professional traders trade the equities, because, especially the ES, because you don't have slippage. You got plenty of volume. If you want to drop 50 contracts, you're going to get filled on them. And unless you're right on the verge of some reversal, there's a chance you might get filled on some and not all. But if you're catching the moves properly, you're going to get filled on every one of those contracts with no slippage, none whatsoever. So keep that in mind. But I'm going to wrap this one up, and this one will lead right into the next video. Hey, it's Mack with PriceActionTradingSystem.com, and it's Friday. It's April the 4th. This will be our last chart lesson for this week. But the last couple of days we've talked about the lack of entries and not much movement and all. And that's the great thing about the ES, is that no sooner than you feel like it's getting stagnant and there's not much happening, you get a day like today. And look at the entries today. They're everywhere. And this is just through noontime. So from 7 to noon, and there's even other entries I didn't mark here that you could have taken. And so there were at least maybe 2 dozen entries if you wanted to be real aggressive. And even if you just wanted to be conservative, there were a dozen easy entries. So it was just a great trading day. It probably was a little confusing here early on if you didn't really see the bigger picture. But there's a bigger channel here, and the only way you really could find this was if you drew this line off these lows and then drug it up, and then when it turned down right there off of it, that was a pretty good sign. And when it came back up and turned down again, you got to assume, especially once you get a trend working down, that we're headed to here. And when it went on through, then you got to get a kind of an equal distance and move it down. And I don't think that's quite an equal distance. I think it's more like right in here. It's close enough, but it may even actually be where that one bounced right there. That looks pretty good because that's kind of, you can see prices are kind of working that line both sides, and that looks like an equal distance move there now. So, and this one actually might be just a little bit higher, like so. And that looks pretty close to me. And of course, when it started heading down, I just drug it down to the next low and expected prices to bounce there. And so that's why I originally had it down here. And who's to say, it could be right either way. But that's how I got the original channel. I thought it was just a channel up here, but when it went on through, you got to assume that this is probably a midline and that we're probably going lower. And that's how I ended up with this channel. So that looks pretty good right there to me, and I like that. But you really didn't need this bigger channel to trade this. You needed it really to take this, and this is still an aggressive short right there, and there's actually a long right here, and I meant to make that one green too. But let's back out a little bit, and I just wanted you to be able to see the bigger picture. And I'm going to remove this bigger channel and show you that you don't really need that to trade this. As long as you stayed with the shorter term trends, it was fairly easy to see. And there's even one, this is actually a trend here too, and it comes right down through here. You get the break here and a move to a new low, and then you get a little move back up here. This one was a little bit confusing. I was looking for maybe a measured move up from here, but you never really got a good entry, so it didn't matter. And the next thing you know, it's heading down, and when you got the trap right here, boom, you just enter right there. So, but let's talk about, back up and start and talk about it from the start here. But when I came in, we had a little channel working up here. We actually had the break right around the 7 o'clock hour. Let me find 7 o'clock. We were right in this little area right here when I came in. So it was just kind of a little congestion area. It wasn't a great, it was kind of hard to enter out of that. But what you needed to do was wait on this. Let me show you this. Oops. There's a short trap here. Here's your low. You count down first entry short, pull back second entry short. So you tried to go short twice. It bounces right off the EMA and goes higher. And if you tried to go long right here, there's really kind of a second entry long right here, but you can't go long there at those highs. Not when you've got this much. This is not moving out of here quick enough, so it looks too much like just a slow, choppy congestion move, and that's what it turned out to be, congestion. It's real obvious by the time the next bar or two formed. But when it turned down again and then turned up, it was kind of hard to get in this trade. You really needed to use a limit order, so what I did was waited on it to break higher, and I dropped the limit order in here, and you'd see it came all the way back and filled me and then turned back up again. And I got a little nervous when it turned down, but this was the first break, and this might have even been just a tad lower like that right there. But this was the first break. There wasn't much happening in the overnight, to be honest. Just wasn't a lot of price action at that point. So it looked like it was going to be a real slow day, but man, it took off, and then you get there's actually two entries right here. I guess I should make two circles so it's not confusing. But this other one, the first one was really, I really wanted to make that green, even though that is a second entry long and it's bouncing off that trend line. I really still wanted to make it green. It's a little bit aggressive simply because you got a little trend working down through here. That was I need to start keeping these on there, but I try to clean my chart up as we go. But that's a second entry long, but we had an overshoot here. We've already had a break, and you know this channel's kind of valid because you got the break here and you got kind of an equal break on the other side. And this was probably a little bit higher like so. So you know you're probably reading that properly. Even though this bounced here, you didn't have a break of this little trend line right here. But there you get your close outside, then it pulls back and it creates that little trap. It breaks down and it fools everybody. And so then you can go long. And it still took it a little work to go higher there. And another reason this is green right here is because you did already have the break in a new high, so it's a good chance you're going to get a correction. But when you got that little second attempt to go lower right there, I really, you know you're going to get some trap traders, so you're probably going to get another move up. And we did. We made just a new high, and then we had another little. We really had a double top right there. And then it turns down. And a real aggressive trader might have gone short right there. Everything's still above the EMA, so I didn't like that one. But then you get another little bounce right off the trend line, and that's really that's really like a second entry off of this move. And even though this isn't equal here, somebody else asked me about that. This is just like a double top. That's close enough. And in trading, generally, if it's close enough to look like something, it's the same. So, so that's like a first entry. You could count that as a first entry. And then when that pulled back a little bit, that's like a second entry right there. I like that. And the only reason I like that is because it's right off the trend line, and we are below the EMA now. And then you get this move up right here, and this creates a failed second entry long. And it breaks above this bar first and then turns down. You just have a stop waiting there, and boom, look at it go. And you don't know that it's going to do this, but you know it just takes off like a rocket. And then you get another chance right here with that bar right off the line again. And we hadn't got to the other side yet, so you know we're going to keep going. And it just keeps on falling, and then it comes back. And we kind of went outside it here, so really an aggressive trader might have gone short even right there because this is weak. This thing is dropping like a rock. And but we got a break of the trend line right there. And so my thought was we would probably go back to the EMA before you'd get a setup, but it didn't happen. It was still too weak. So, you know, let's just go back and make that one green because there's probably some people that might have seen that and taken it. I wanted to take it. It was real tempting, but you know, we'd already had such a good move down. I didn't want to risk another entry right there. And then you get a two-legged pull back to the EMA, and you got a for sure clear break of the trend line, move back to the EMA. So I'm thinking we're going to make one more move down maybe, and then maybe reverse out of here, and there it goes, boom. And you can't take this first entry because it's just really too aggressive. There's not a good setup. That's not rejection right there. It's just kind of slow moving back to the EMA, but then it shoots on through and pulls back. And you've got this little channel working up, and that's really the first break. And it really was not a break until here because this closed right on the line, and that line could be just a tad lower. So you really didn't get a close outside of it. So aggressive trader is going to take that to the long side looking for another leg up. And you don't know. Again, I was really surprised this thing just kept going like that. It just kept going and going and going. And then suddenly it turns down right here. And the only way you'd want to take that one was if you saw this trend line that was coming, the bigger channel that I showed you earlier. And even then it was a little bit aggressive, I think. So I marked that one in green. And you don't want to go long here, but you don't really want to go short here either. And you still really don't want to go long because this is not rejection off the EMA. Look, this is what rejection off the EMA looks like. These moves right here and these moves right here. And look how this just kind of stacks up there. And we actually go below it a little bit. We still closed above it. So I didn't like going long. So you just really just sit and let's, this is where you got to be patient and you got to sit and wait and see what happens. And it doesn't go very far. And then you got to, now look, you got a new high right here, pull back first entry, pull back second entry. So now you got a trap, a failed second entry long. So just put a stop right there, quick, easy trade. And also you got this little channel working down through here. I didn't even mention that. I forget about those, to talk about those some. And that's the first really close outside of it. And so you know you're probably going to move to a new low. It doesn't have to go very far, but because there's a trap there, you're going to get a kind of a surge down if it truly trapped people. And I'm guessing it did because that's a huge move up. And so a lot of people that didn't see the bigger channel or don't see the bigger picture are probably thinking, if they're not using their short-term trend lines, they probably think we're going even higher here. And so they get trapped on the wrong side, and you know that's going to create a surge down. And it did, and then we kind of get hung up, and the next thing you know, it surges right back up again. I don't know what was going on there. There weren't any really news items. All the news was at 7:30 this morning, which was right in here. And that's why this is so emotional. And I meant to talk about, if I don't put it on the chart, I forget. But that's why this was so up and down. And that's another reason that I almost probably should have made that one green. But if you can see it and you can get into it, we've already shown you that the price action is never wrong, even during the news. The moves get bigger, and that's why you got the move outside and the move outside here. And that might be what created this surge back up, is a lot of people said, hey, this was a news item, so we may not count that as a break. And so if you do that, this is the first break of that trend line. And so maybe that's why. But for whatever reason, this thing just kept going and going and going. And I'm guessing that they got it moving and they were just hitting the stops of all the people that got short and didn't take their money. And then finally it gets up here, and just as they give up and throw in and give all their money back, then look what happens. So that's why I like to take my money. That's why I like to trade the way we trade. So at this point, I was a little bit confused because this actually went through the trend line up here, went a little bit higher. And so I was a little bit confused and thought, well, maybe we're just going to end up in a little trading range here. So I didn't want to do anything till we had another trap right here. Notice that we got a double top. It's like a new high. It is still higher than that swing. It's higher than that swing. So it's like a new high. Pull back first entry, pull back second entry, and you don't want to go long right there. That's not a very good setup. There's no bullishness. You got this trend line. I had it a little bit lower at first, but I adjusted it some later on as we got more price action. But regardless, you got this channel working down, and you got a second entry, failed second entry long, and so just go short right there. And evidently it didn't trap a lot of people because it took a little bit of work to get it on down. But if you entered there, you were in good shape. And you might have even thought about entering short again in here, but the reason that you can't is there's too much overlap. This is congestion now, and what usually happens is it breaks out and snaps back, which it did. And but then you can't enter here because you're too close to these lows, and it's too much like a little trading range. So but when it turned back up right here and gives you this real bearish bar, I kind of liked it then. It's like a breakout pullback, and this traps some people most likely. And this one's right off the trend line. So, and you've got some more. You might have even thought about getting in there because of that, but I just think you were better off to wait. And then when it tried to go higher again from off this low, that was more like a breakout pullback short. So I liked it a little better there. And that one is right off that higher trend line. And boom, off it goes. And again, you don't know that it's going to do that. Again, I'm going to go back and change that one. I'm going to make that one green. It's really kind of aggressive because they're still looking like congestion and all. What I really liked about it was this real bullish bar that broke higher, and then the fact that it turned down almost instantly. That's what I really liked about it. And but looking back at it, it's probably a little aggressive, even though it is coming right off that trend line. But that's the first confirmation, really. Uh, Originally, though, I had mine a little lower, and it looked like the first break, so I assumed we would move to a new low, and that's another reason I liked it. So, but later I ended up adjusting. I don't even think we had a break there. So, let me get that back where I had it. Okay, and then you get a breakout pullback short. Look how bearish that is. And if you saw the bigger picture, you figure we're probably coming back down to this line, and that's exactly, you don't know that it's going to go straight there like that. But again, another nice runner down. And I didn't mark any of these because um, I wasn't sure this was an overshoot at that point. But when it just kept on going down, then you got to figure, hey, we probably got a midline here, and this is a midline. But I didn't mark any of them. You could have taken either one of these. As bearish as this thing is, you really could have taken them. But I didn't mark them because they're really aggressive, and there's not, especially this one, there's not much room before this low. There's barely enough on this one. I'm not even sure there's quite enough, and that was part of the reason I didn't like taking them too. But I was just too afraid it was going to bounce and go back to the trend line, and it tried right here, and it comes back up. Now this is a swing high. Notice we tested it once. We came down, we tested it twice, and it fails, and this thing turns down. And this is a little bitty bar up here. I like that one. You really had to wait on this bar, and when it broke lower, just drop a limit order in there, and you see it came all the way back to here before it went lower. So that was a nice entry right there. And you really didn't get a chance to enter again until right here. You might have thought about entering here because we didn't have a move to the other side of the channel yet, and that might have, but that's just such a bearish move down right there, and we've been away from the EMA. There's too much chance that it's going to pop back, but it did go higher first and then go lower. So, aggressive trader might have taken that one. Let's just go ahead and mark that one green too. I kind of like talking about them a little bit and thinking about them a little more, but of course it's always easier to see after the fact. So in real time, I didn't like that trade because you don't know that it's going to drop down real quick like that. But you are looking for it to come to this other side, but there's too big a chance it comes back to the EMA or even the other side but first. And that's exactly what happened. It didn't go much further. It got enough to get the scalp, and then but it did touch the other side here. And then you get a two-legged pullback. That's a second entry short right off the EMA, and it broke higher first and turned down. I love that setup. Look at this, new low, pullback first entry, pullback second entry, and I really like that one. And boom, off to the races it goes. And then it pulls back. And notice we aren't down to this line yet. And this one broke higher again before it turned lower. So it was almost a repeat pattern of that right there. And on top of that, I was looking for a measured leg like that one. And you can see we got it to the tick. Exactly perfect. I mean, this is almost a perfect repeat trade. I mean, look at that leg, the two legs back, and then that's almost a exact replica of that, almost exact. And the same kind of thing happened, broke higher, turned down. It didn't go out the other side, but I still liked it with a stop, and it kind of got hung up there, and I almost wanted to think about exiting this trade, but it moved on down, and that's when it hit. Actually, I didn't have this line there then. I had it a little bit lower, so I thought we might even go lower than that, and we did end up going lower than that. But then you get a move back. You got to wait till it gets up here. There was a second entry short right there. And if you took that, that's fine. It is a second entry short. But notice that we didn't I want to get this drawn exactly like I had it. And you can see that we didn't have a break yet. And so I was looking for a break and a little move back, and then you get a second entry counting off the top. There's a new high, first entry, pullback, second entry. So that's why I waited on that one. We'd had a huge move down. I think it was too risky to enter without waiting on, the break of the little channel and then a move back. And then you get a failed second entry long again and just go short below that, and then off it goes to the races. And on these double tops, let me explain this. You can count this as a new high or a double top. It worked. You can count it either way. So when we tried to go back up here again, I counted this as a new high, and it's like again like another failed second entry long. And there's some more clues here. This is not rejection of prices. Prices should have hit here and rejected, and they didn't. And that's another clue why, another reason why we're still probably going lower. I haven't seen any real rejection yet. This thing is really weak today for whatever. So I like that. I didn't like going shorter here because I think I had my line. Let me move my line back to where I originally had. I had just had it right down here at the bottom. And you can see where were we? Yeah, we were right there at it. So I didn't like going long anymore there. And that was it. That was the last trade that I marked. We finally got a break of this channel right here. Notice there's a new low here, first entry pullback. There's a second entry short there, but it's not a very good setup, and it's kind of a repeat pattern of one we saw earlier. I can't remember where it was though, but look at that big bearish bar. And if you wanted to wait on the second entry, it was here, but then you're getting pretty close to these lows in this line again. But you figure we're going to make a new low here, so I really thought maybe once we broke down in here that we'd probably come on out of there, but it hadn't happened yet. So maybe we'll see prices come out of here pretty quickly. Or maybe they'll keep going lower, but we do have a break of this channel. So you can see almost by following the rules of the smaller channels that it still keeps you on the right side. But how many setups is that? 1, 2, 3, 4, 5. I'm only going to count the non-aggressive ones. 6, 7. Where was this one? 8, 9, 10, 11, 12, 13, 14, and 15. I'm still iffy about that one. Since that was news, I tell people you got to be real careful in the news, and usually better off to skip it. So it is a more aggressive trade. So I'm going to change it to green. But that's what I saw today. And again, there's some other trades in there that you probably could have taken. We talked about that one. There's actually a failed second entry long right there. So you might have gone short right there. By the time all those stacked up, I think it's too risky. Here's your breakout pullback short. So that might have been a decent trade, but it's so close to this lower line. So maybe I was right the first time on where that line is at right there. It just didn't look right a minute ago, but it looks pretty close. Let's just measure. Here's what I like to do. I like to take my arrow and use my crosshair so that I know that I go straight up and down. You can see whether it's straight up and down. And there it is, and then we move it down. So it's off just a little. There's your perfect measured move. And that fits pretty good right there. That's bouncing, 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 and we break lower. And as weak as this market is, there's one leg down and then another one. It's not surprising that you get an overshoot on a day like that. So anyway, but that's what I saw today. A couple other things I want to talk about real quickly, and then I'm going to wrap this up for the week. I continue to get emails from people that don't quite understand how to enter. Let me just show you an example. Let me back out a little bit here. All right, this is your signal bar right here based on entering this trade. This is your second entry. Here's your new high. First entry, pull back, second entry. So there's your second entry counting off that new high. The only way you can enter this is on a stop one tick below that signal bar. What some people are doing is they're waiting on the trigger, which is breaking down here, and then they're waiting on this bar to end and then entering. Well, look what's happened by that time. You've missed 2 or 3 ticks of movement, and it turns down and then turns back up. A lot of these trades will only have just enough room to get your scalp, and then something will happen. It will reverse, or you'll get some kind of big correction or something. So if you don't enter in the right place, you're going to be in trouble. And look at this trade's a good example here. Let's say this is your signal bar, which it is, and you wait for this bar to end and then try to enter. You know, if you use the limit order, you might have got in, but if you use a stop right there, or I don't know how these people are always entering. They don't say, but you just see where they enter, and they're entering way down here, and you don't have room to get out. And this was an easy trade. It did hold up a little bit there, but it went on down, and that was an easy scalp. But if you wait on this bar to enter, you've missed most of the move. This one you wouldn't have to worry about, but it's very rare that you get, it's only on strong trend days that you get these kind of moves. Here's another good example. When this broke lower, when this broke higher, the entry was a stop one tick below this bar. So your stop was right there. And if you entered anywhere but there, you didn't get out of this trade. So you got to enter in the right places. And I hope that's clear. And make sure that you're entering in the proper places, which is always, if this was your signal bar here, you wait till it to close and you instantly drop a stop right there. And if it moves too quickly, like this one did at first, drop a limit order back in there, or maybe even one back right at the close, and because usually it will come back and fill that little gap, and that's what happened here. It closed here, and it opened and went one tick all in one move. It might have even went two before it comes back and fills that little gap. So you know, sometimes it'll break lower and take off and you miss it, but if you don't have time to get a stop order in there, which it only takes that quick, just right click and then boom, click your order and it's there. But for whatever reason, if you miss it, drop a limit order there, or maybe even get a little more conservative and back it up one. And let's see if it'll, because it usually will come back and fill that little gap right away before it heads lower. And that's what happened here. It opened here, traded down a tick or two, and then it came back and filled that little, because that's a gap. If the bars don't overlap, there's a gap there. Notice how all these bars, even when they're moving down pretty strongly, let me find a strong move here, right here. Notice how all these bars still overlap just a little. If they don't, if they open and close and there's no overlap, they're usually going to come back and fill that. And that happened right here. No, I take that back. It happened right there. See, here's one where it didn't come back and fill it. It had to come back here and fill it before it went lower. So if you got caught up right here, a limit order wouldn't have got filled on it. Most of the time it will, but it didn't there. So that's why you might just put your limit order right back where it was. And this one might have failed so fast that you didn't even have time to, you may not could have gotten in it. Sometimes it's just nothing you can do. So you just have to do what you can do to get in it, or just let the trade go on. Don't chase it, because look what happens if you chase that trade. It comes back and it may not come back down again like that. So you don't want to chase it, because you may get stopped out. Because if that setup would have happened right, it actually did happen. No, it didn't, because that had a stem there. But let's say that happened right here, and you chased it down and got in down here. Guess what happened? You got stopped out on that trade, because look, it started climbing. You can't hang on when this thing keeps going. You got to exit, because you don't know that something like what happened up here earlier today like this keeps on going, and next thing you know, you're down a bundle. So you can't afford that. So I hope that makes sense. That's going to pretty much do it for the week. We'll be back Monday to do it again, but I'm going to wrap it up. This is Mack. with priceactiontrading system.com, and we'll see you next